Now, we do apologize for that technical glitch that we had earlier. And finally, this evening, the South African rand slipped early Thursday as investors awaited the South African Reserve Bank's interest rate decision. Internationally, the dollar rose 0.2% against a basket of currencies following the US Federal Reserve's decision to keep interest rates unchanged and lower its growth forecast. Locally, the rand, sensitive to global and domestic risks, faced pressure from budget deadlock and trade tensions. In earlier trading, the rand traded at 18.18 against the dollar, about 0.3% weaker than its previous close. Meanwhile, the top 40 index also saw a 0.2% dip. Analyst Mabyanine reports on the market's performance.
So the South African rand has taken a slight hit, slipping to around 18.17 to the dollar, a 0.3% drop from yesterday. The dip comes just ahead of the South African Reserve Bank's interest rate decision. So the move wasn't much of a surprise, as most economists are expecting the bank to hold off on any changes due to ongoing economic uncertainties. A big factor influencing the rand right now is the US Federal Reserve's recent decision to keep interest rates unchanged whilst lowering its growth forecasts. That's definitely affecting global investor sentiment, putting an extra pressure on emerging market currencies like the rand. Close to home, South Africa's political and economic challenges like tense relations with the US are also adding to the currency's volatility. Despite these struggles, the rand has held up relatively well. Some experts believe that if the Reserve Bank cuts rates in the near future, it could give the currency a boost, especially with inflation coming in lower than expected in the last couple of months. Meanwhile, the stock market saw minor changes, with the top 40 index dipping about 0.2%. On the bond side, the 2030 government bond performed slightly better, with its yield dropping by 1 basis point to about 9.075%. Overall, the rand's movement is a mix of local and global factors, and its future will likely depend on upcoming economic data and policy decisions.